Hello, this is another educational video by Counting on Accounting. This video is for paper F2 of the ACCA accounting exams. We'll be going over common terms and the literature you'll be expected to know to pass your ACCA F2 exams. A cost unit is the basic unit of product or service for determining costs. Cost units are necessary for measuring costs, measuring profits, and controlling costs. Now, using three examples, Company A makes liquid soap, Company B makes furniture, and Company C, this will be familiar to Nigerian listeners, makes or manufactures bags of water, pure water. Now, what we find is that businesses with homogeneous products that identify or similar products have an easier time organizing their cost units. So for Company A that manufactures liquid soap, a box of soap containing maybe 40 individual packs of soap can be a cost unit. And for Company C that manufactures pure water, a bag of water containing 100 different sachets might be a cost unit. There are several classifications of costs, but for the purpose of your F2 exams, the ones mentioned here are those relevant to the F2 exams. So for the F2 exams, we have direct production costs, also known as prime costs, and indirect production costs, most often known just as indirect costs. Direct costs are those costs that are, for lack of a better word, directly related to your production. So again, going back to Company A that manufactures liquid soap, would have direct labor cost and materials costs. So that would be the labor for the factory workers, the chemicals, the bottles, or whatever they use for making liquid soap. Indirect costs are costs that are relevant for production but not directly related to it. Electricity, for example, you need electricity to run your factory, but you can't say I've used how many watts or whatever the measurement for electricity is for a bottle of soap or for a bag of water. Factory rent, you need rent for your machinery, for your people to work. For any business, the total production costs are direct costs plus indirect costs. We move on to cost behavior. Fixed costs remains constant regardless of production levels, e.g. factory rent. You pay the same amount every year on year, regardless of whether you produce 1 bottle of soap or 1,000 bottles of soap. Variable costs are those that fluctuate according to your production level. Direct costs are usually variable costs. The most obvious example of a variable cost is materials. So in other words, the more you produce, the higher those costs go. The less you produce, the lower those costs are. Semi-variable costs are those that have both elements of fixed costs and variable costs. An example of a capacity-based cost or a stepped cost would be fuel in a country like Nigeria, where you have to generate your own power if you run a factory. So if we say in order to produce 1 to 1,000 boxes of soap, Company A needs 100 liters of diesel, and then another 1,000 boxes of soap requires another 100 liters of diesel. That would be an example of a stepped cost. So in this video, we've covered the definitions of a cost unit, direct cost. We've also learned that direct costs are also prime cost. We've covered indirect costs. They're also known as overheads. Finally, we've covered cost behavior, which are fixed cost, variable cost, semi-variable cost, and stepped costs. Thank you for watching this Counting on Accounting video. For more exam-based materials and articles, please check out countingonaccounting.wordpress.com.